our guiding investment thesis, the core thesis is that you do within the hospitality industry, right? So we like hospitality for a couple of reasons. Maybe I'll first say why we like hospitality, because I think that guides them. The next question will be, we like hospitality because hospitality is high liquidity vis-a-vis other real estate investments. So, for example, you might have you might have an apartment or something, and we've done some apartments. We built some apartments. We built some in Southern California and all that stuff. So we have a little bit of knowledge in apartments. In apartments, you can have value add. You do some renovations. You increase the cash flow. You lease it out. All that kind of stuff. Right? Great. Hotels we like because there's that business aspect, right? So because you have the real estate and you have the business aspect, you can go into a hotel. We did this in our Marriott in South Dallas, kind of just in a normal, it wasn't some big resort. It's a Fairfield Marriott. And we took this revenue from 2 million, and we're now just on 3.2 million in our T12 in the course of about 16 months. The reason that is that you can do things to hotels that you can't do to other types of real estate investments. You take it, you go have sales, do blitzes, you think about how you do your group rates, your LNR rates, your rates. You can do all these kind of things with the hotel. So first, we like hospitality because of liquidity, right? It's not uncommon to have 13, 14, 15% cash on cash returns. Our highest last year was 16.68% cash on cash return, and on a limited service hotel. But our thesis is that we want to play on the both sides of the spectrum in the hospitality world, and very little in between. That is that we like the cash flowing limited service hotels. We provide regular distribution checks to investors, right? Every quarter you get your 2%, 2.5%, something like that. And then we like luxury, which has the big value added appreciation. I worked for a little bit of time for managing a fund that was backed by First Round Capital, the venture capital fund, based out of New York when I was in law school. And the VC model is that you invest in companies that are really young, blah blah, and then you make 50x your money, and you make nothing in between, right? You invest at day one, there's nothing for 15 years, and then you get a Facebook, and you get your $50,000 turned into 500 million or something like that, right? That's really nice, and you can do that in luxury, but you offset that risk by also investing and putting a portion of your portfolio in limited service. So we like to do those two things. So you have luxury, a Waldorf, a Tapestry by Hilton. You have these things where you can buy them for 30, 40, 50 million, maybe you can buy it from 100, 115 million. You put things into it. You maybe do a brand change. You add more rooms. You build more amenities out. And it's very, very possible that you triple the value of that hotel in 5 years. Triple it, right? If you're leveraging on a 35, 40% basis, then you're talking about massive return, but there may not be a ton of cash flow in the interim, right? There may not be a ton of liquidity. And so our thesis has been to look at those two areas that there's hair on the deal, whether that's operational side, whether that's development side, whether there's some other kind of things going on, something tricky, and then we try to improve those, and we work on both sides of the spectrum. For investors, get steady cash flow, and you also get big appreciation plays.